Hello everyone. In this video we are going to look at the very basics of accounting, that is the double entry theory. I worked with many accountants in my career. While they all know which accounts to debit and credit, not many really understand why an entry is debited or credited to a certain account. Often it is either memorized or done out of practice. However, if you really understand the theory behind it, you need not memorize the double entries. You can simply create them for any kind of transaction. Now, what's a double entry in the first place? Double entry accounting is a method of recording financial transactions in which each transaction is recorded in two separate accounts in a ledger, one as a debit and the other as a credit. This system ensures the integrity of financial data by providing a system of checks and balances and helps to prevent errors. The debiting and crediting of an account or accounts is based on a certain theory. This is what we are going to learn today. This theory was introduced by an Italian monk called Luca Pacioli somewhere in the 15th century. Just a bit of history for you there. So let's see what this theory is about. As you know, in accounting there are five main elements. They are assets, liabilities, equity, income, and expenses. And the double entry theory is built around these elements. Now, what is debit and credit? They are simply two sides, just like left and right. Normally, debit is shown on the left side of an account and credit is shown on the right side of an account. So let's have a look at this theory now. Assets. The default side is debit. If it increases, it's debited. If it decreases, it's credited. Liabilities. The default side is credit, and if it increases, it gets credited. If it decreases, it gets debited. Equity. The default side is credit. If it increases, it gets credited. If it decreases, it gets debited. Income. The default side is credit. If it increases, it gets credited. If it decreases, it gets debited. Expense. The default side is debit. If it gets increased, it's debited. If it decreases, it's credited. That's it. Now, if you just memorize this theory, you'll be able to work out the double entries for any kind of transaction. However, as I mentioned before, it's not about memorizing, it's about understanding this theory. So let's see what's the logic or rationale behind this theory. Normally, this is explained using the accounting equation, which states that asset equals liabilities plus equity. This is correct, but let's take a little simpler approach to understand this. Let's use the simple idea of what the business owns. And what the business owes. By ownership, I mean what the business owns, and not what the owners of the business own. Because in theory, the business is identified as an individual separate from the owners. Usually, anything owned by the business goes to the debit side, and what is owed goes to the credit side. Bearing this in mind, let's see how this theory works. Assets. Assets are anything owned by the business, like stocks, debtors, cash, etc. The business owns these assets. So the normal side is debit. When assets increase, it increases what the business owns. Therefore, any increase in asset is a debit. On the other hand, when assets decrease, it decreases what the business owns. Therefore, any decrease in asset is a credit. Liabilities. Liabilities are anything owed by the business, like creditors, loans, etc.
These are owed by the business to outside parties.
So the normal side is credit.
When liabilities increase,
it increases what is owed by the business. Therefore, any increase in liabilities is a credit. When liabilities decrease, it decreases what is owed by the business. And therefore, any decrease in liabilities
is a debit.
Equity. Equity is the share capital and reserves in the business. So the normal side is credit. Now hang on there for a second. Why is equity a credit? Isn't it basically what the business owns, like the share capital and reserves? That's right, but who owns it? It's the business owners who owns the share capital and the reserves, and not the business itself. Based on accounting principles, the business and the owners are treated as two different persons, and therefore the equity is actually a liability of the business towards the owners. And that's the reason why equity is a credit. So in essence, the same treatment as a liability apply to equity as well. That is, an increase in equity is a credit and a decrease in equity is a debit. Income. Income results in an increase in profits, and an increase in profit will increase the equity.
When income reduces, it will reduce the profit, and therefore it will reduce the equity.
Therefore, an income will get the same treatment as equity. When income increases, it's a credit, and when it decreases, it's a debit. Expenses. In a similar manner, but with the opposite effect, an increase in expense results in a decrease in profits, and the decrease in profits will decrease the equity.
The decrease in expense will increase the profit, and that will increase the equity.
Therefore, an increase in expense is a debit, and a decrease in expense is a credit. Let's look at a quick example. We need to record a vendor invoice of $100 for stationery expenses. Let's try to break down this transaction. It's an invoice from a vendor for expenses, so it involves a vendor and an expense. Stationery expense is an expense. So the expense is increasing, therefore we have to create one entry for debit. And the vendor is a liability is increasing, and the second entry would be a credit. Now we pay the vendor using a check. Let's try to break down this transaction. This is a payment to a vendor, so it involves a vendor and a bank account. A vendor is a liability. Because we are paying them, the liability decreases. Therefore, the entry goes to debit side. The bank is an asset. The asset is getting reduced because we are paying. Therefore, it goes into the credit side. If you learn how to break down a transaction in this manner and apply the double entry theory, you'll be able to figure out the entries for any kind of transactions. Hope this was useful. Feel free to leave any questions or comments on the comment section. Thank you for watching.